Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report where today we look at the latest inflation figures. Now this is really important for the interest rates outlook and the Reserve Bank will be watching these figures very closely. The June quarter inflation figure is out, 1.6% growth in prices in the June quarter from the March quarter, and for the year we're looking at 4% inflation. Now this is the highest quarterly inflation we've seen in 8 years, and it was higher than most economists had expected and the Reserve Bank had expected. The main culprits here are food prices and petrol prices, but domestic inflationary pressures are strong too. Let's look at the longer term chart for inflation. As you can see here, it's blipped up to nearly 4% from the same quarter a year ago. And let's look at this chart, which shows what's happening with the different types of inflation. There's two types of inflation, what they call Tradeables inflation. That's linked to international prices. So when you buy a packet of mutton chops or whatever, that's based on the international price for mutton, and therefore that's a so-called Tradeables inflation. Obviously, petrol and some other food are in there as well. And that shows that blipping up quite strongly to 4.8% for the year, which is the strongest we've seen in nearly 15 years. And then we have the other type of inflation, which is non-Tradeables inflation. That's inflation linked purely to prices here. So the price to go to the dentist or the price of power or that sort of thing. Now that has been well over 3% for a long time. It's edging down a bit now. And we saw inflation for the quarter in June versus the same quarter a year ago at 3.4%. Now this was in line with what the Reserve Bank is forecasting, and the Reserve Bank's forecasting a significant decline in these domestic inflationary pressures over the next couple of years. So what does this all mean for interest rates? Well, the number today was higher than most had expected and higher than the Reserve Bank had expected, but mainly in the area of Tradeables inflation, so inflation coming through from outside. The Reserve Bank has said that it's going to look through this big spike in petrol prices and food prices and sees there's room for an interest rate cut later this year. The big question is when later this year. Most economists before these numbers were expecting sometime in September, possibly as early as next Thursday when the Reserve Bank makes this decision. I think these decisions make it, these inflation figures make it slightly less likely we'll see an interest rate cut next Thursday, but inflation is still a problem for the Reserve Bank and it has to be careful about how quickly it cuts those rates. I'm Bernard Hickey for interest.co.nz. That was an economic weather report.